by the department, because there is a difference in the declaration made under IDS, Income Disclosure Scheme, and the Pradhan Mantri Kalyan Yojana scheme. Under IDS, the declaration was to be made, but if by default you do not make the payment of the taxes, which are supposed to be made in 3 installments, then it automatically stands that you have the declaration is not made. Whereas in the case of Pradhan Mantri Kalyan Yojana, you need to make a declaration. Thereafter, before making the declaration, you need to make the payment of 50% and the 25% you need to deposit in the bank for the 4 years and attach the certificate along with the declaration, and thereafter the declaration is to be submitted. Now, if this is the process, that means the declaration, unless there is some flaw or the provisions we are not covered by, only in such cases the declaration will be rejected. But the facts does not talk about any rejection, so we understand the declaration made by a person who is of no means. They have already given the reason why he is treated as no means. But nevertheless, since the declaration has been accepted, I think the assessing officer is not justified in making an addition under section 68. But one needs to be careful over here that Mr. A, who is of no means, he will not come out merely by making a declaration of rupees 50 lakhs. The 50 lakhs have been given by way of an advance to the SSC, so he needs to make a declaration of 200 lakhs. Thereafter, pay the taxes and the deposit. The balance amount left to him with the 25% only, and that can be given to Mr. A. The third one is addition of rupees 1.50 crore under section 56(2)(7). To summarize the fact, the SSC had booked a flat in 1st July 2013, and a letter of allotment was also issued by the builder to the tune of rupees 1 crore. In the assessment year 17-18, this fact was registered and the stamp duty value was 2.5 CR. Now, till date, from the facts it says that till date the flat is not received, the possession is not received. Let us understand what are the provisions of section 56(2)(7) says. Where an individual receives in any previous year, I would repeat the word, where an individual receives in any previous year from any person any movable property for a consideration which is less than the stamp duty value for the property, then the stamp duty value of such property as exceeds such consideration shall be treated as income. Now here in financial year, that is the assessment year 17-18, registration of flat is done. Because of the registration of flat, wherein the stamp duty value is 2.5 crore, there is a trigger that the AIR report shows, and the consideration paid in 2011 by the SSC, which is rupees 1 crore. Therefore, the difference of 1 crore and 2.5 crore is treated as an income from other sources by the assessing officer under section 56(2)(7). Now, firstly, the provision of 56(2)(7) applies when individual receives any, of course the section says individual or natural, we are concerned with individual. So individual receives an immovable property. When does he receive? Does he receive at the time of booking the flat? Does he receive at the time of allotment of the flat? On registration or on possession? The issue is debatable, it's a grey area. We have an expert sitting over here, wherein we had an occasion to discuss his paper, I think 3 years back. Right, sir? 3 years back we had an occasion to discuss Padam Saab's paper on this very issue. And till date, we do not have an answer to this, and it would still be a grey area and a debatable area. We have other evidences to support our case wherein we can take forward. In assessment year 17-18, what has the action been taken that triggers this income? It is merely a registration of agreement which is done. The agreement, I would say, by way of a letter of allotment, the deposits were given, advances were given, letter of allotment which was given, and that all was done in the year 2011. A merely registration which has been carried out at that time, at the time of carrying out the registration, the value was 2.5 CR. And that is the reason why the assessing officer has simply applied the provision of 5627 and treated the difference as income. Secondly, as discussed in our mock tribunal, the immovable property, what is the definition of the word immovable property? We have different definitions, but however, we can take the benefit of the section 50C, which otherwise has been referred in section 5627, instead of going to section 269QA. And wherein with effect from 1718, that is in section 5627, with effect from 1718, provisions similar to section 43CA is inserted. In section 50C, provisions similar to section 43CA is inserted. Therefore, the value for stamp duty as on 1/7/13, that is the date of booking, should be considered. And we have a judgment of, I think, Ahmedabad Tribunal, is of Pramod Kumar, wherein, though it's a single member judgment, but very elaborated, wherein it has been held that section 50C will apply retrospective in line to section 43CA. But friends, this completes my question number 3, coming to question number 4. SSC has received a Mercedes car for value of 75 lakhs as a gift from his friend. Now, SSC has disclosed this gift in his capital account. In spite of that, the learned AO has made an addition under section 69. Now, merely disclosing under section 16, merely disclosing in the books of accounts, does it mean that section 69 does not get triggered? The answer to that would be no. Because SSC had made investment, and the source of the investments here, there are two case compartments. One where the SSC has disclosed in the books of accounts. The second one, it says it does not disclose in the books of accounts. In that case also, SSC made investment, and source of investments or the explanation offered is not satisfactory. The value of investment may be deemed to be the income of the SSC. Here, merely by saying that I have a luxury car which has been gifted to me by some of my very good friends, I wish also I could have such friends. I don't mind paying taxes. Nevertheless, here the SSC is not able to substantiate the genuineness of the transactions merely by saying that I have purchased the car, I have received the car as a gift from my friend, and the friend would not be able to substantiate and say that yes, I have given a gift of the car. In that case, the provisions of section 69A will get triggered. Friends, all these cases we have seen that why does the assessing officer wants to push the SSC in spite of whether he has disclosed the income by way of a business income, by way of any other sources of income. He wants to apply the provisions of section 60 specified sections. The reason we already observed that by treating that, the SSC will have to pay taxes at the rate of 77.25% plus the penalty if he falls in clause B, plus the penalty of rupees 10 at the rate of 10%, that is 60 is 10%, that again is a gray area whether it is the 10% of 60 or it is the 10% of 77.25. So even if I conservatively consider 10% of 60, then also the total taxes and penalty would come to 83.25% as against normally what the SSC would have paid till assessment till 16-17 at the rate of 30%. Next leads to rupees 25 lakhs additions made under section 68 offered as miscellaneous income. I would say that we all must have come across our clients, small-time clients also saying that, look, my wife's income is much below taxable limit, or let me increase her income, which is not an actual income by way of tuition fee or any other income. Now, such, if you are not able to explain the sources of such income, in that case, this income will be treated as an income under section 69A and under section 69 as an undisclosed, will be treated as an 68, and if you are not able to explain the satisfactory nature of the income and the source of the income, the additions would be sustained. Now we observe, SSC has declared 50 lakhs under Pradhan Mantri Kalyan Yojana scheme. I would not be able to run through the scheme, entire scheme, but I would like to read the object of the reasons. Object and the reasons what the Finance Ministry, that is, gave at the time of presenting this scheme. In the wake of declaring specified bank notes as not legal tender, there have been representations and suggestions from experts that instead of allowing people to find illegal ways of converting their black money into black again, and government should give them an opportunity to pay taxes with heavy penalty and allow them to come clean, so that not only the government gets the additional revenue for undertaking activities for the welfare of the poor, but also the remaining part of the declared income legitimately comes into the formal economy. Thus, money coming from additional revenue as a result of the decision to ban rupees 1,000 and 500 notes can be utilized for welfare schemes for the poor. So it makes it very clear that the government wants to penalize the undisclosed income person heftily. So the question what we are left with is that 50 lakh rupees income declared under PM GKC, which is on account of the deposit made in 2011, which was thereafter withdrawn. Out of that withdrawn amount, he has purchased the gold, and that 18 kg gold is lying today at the time of making a declaration. So at the time of making the declaration, the asset what he is having is not in the form of cash or bank deposits. Whereas the scheme is very clear, it talks about cash or bank deposits. I understand that the FAQs which have been considered during our arguments in the morning, which very clearly said that it is whether the jewellery can be declared, the answer to that was no. Whether he can declare the income of any earlier assessment years, the answer to that is yes. So here it says that supposing if you have a bank account which is there for 5 years, the bank account you have been depositing in that bank account for regularly say 5 crore rupees you have deposited, and at the time of the scheme you have offered this 5 crore rupees, though it may be pertaining to any earlier year. In that case, the declaration made would be a valid declaration. If you go to the form, that is form number 1, there are only 2 scopes to declare the assets. They ask you what is the amount of cash, and the second is the amount of deposit lying in the bank, and asking the details of the bank. So considering the form, the rule, the object, and everything, it would be very difficult. And in the morning very rightly pointed out, that the intention had there would have been to declare the gold ornaments which was purchased some years back, then I would understand that this would be a better scheme than the VDIS which was there in 1997. Therefore, yeah.
In GKY they have specifically mentioned in investment in specified entity. What is that?
Yeah, the entities they have covered is the Reserve Bank of India. That in the they came out by way of notification. That is the Bank of India. Sorry, Reserve Bank of India, banks, post office, and I have that scheme and one more. It's all similar to the banks and post offices. Sorry, yeah, those are the entities. What is referred to? The deposits with the specified entities, no? Yeah, offline we will discuss because we will discuss this offline. I understand. And okay. Now, the next one brings me to the last one is the right shares of the right shares received by way of whether it's a gift to be considered for the purpose of section 5627 or not. Now, morning we had referred, one of the member had referred, I think, yeah, the AR had referred to the decision of Sudhir Menon, ITAT Mumbai, which is, I think, not reported still. It is 4887/Mumbai/13 dated 12/3/2014. Wherein, though this was the directly, if you ask me, this was not the issue before the bench. However, the bench has considered various options starting from bonus, thereafter the rights. The rights also thereafter they went to the extent that if it is equally in the proportion of the erstwhile shareholding, if those rights are given, in that case, ultimately the SSA does not make any additional wealth, neither does the company lose any wealth. Therefore, they have treated that there would not have been any gift for the purpose of 56(7). However, they did not stop there. They did mention that in case if the rights have not been acquired in the proportion of the erstwhile shareholders, in that case the differential, the person who has acquired a higher proportion of the shares from the person who has not opted, this would not be a right in the shares. This would be more like the SSC has purchased the shares. And if that is not at the rate which is to be considered for the valuation under Rule 111 UA, in that case the differential amount will be treated as the gift. And I would understand that the elaborate discussion that has been made, carving out the difference between the transfer or the purchase of shares and the right in the shares, there is a good scope that even for time to come, this may be treated as a gift for the purpose of section 56. Yeah. With this, I complete my question 6, which was given to me, allotted to me. Now, the session, I would request Vipul bhai to please take it.
Friends, before I start, let us together pray and wish Mr. Kapoor good health. He had done good preparation also, and we had benefit of his notes also, so I must acknowledge Mr. Kapoor about the note for he was good enough to pass on his note to us, and we wish him well. Now friends, since time is less, I will again bypass the preliminaries. I will straightway start with case study number 1. Various issues are there. Friends, pardon me if I am very brief because I have to accommodate 5 case studies in very short time. Now, first issue is regarding the depreciation, whether any disallowance can be made on account of personal usage the SSC has been taking a very technical ground that there is no provision under the scheme of depreciation and more particularly the scheme of WDV to carve out a particular aspect, a particular asset and then to a particular portion of the asset which has been used for personal purpose. The answer is clearly there is a section 38 still in the statute book and we have to respect and we have to go by that. You cannot bypass that mandatory provision of disallowance of depreciation if a part of the asset also has been used for a personal purpose. And there is actually no conflict at all between section 38 to 32 and the definition of return value, because definition only says that you have got a block of asset, how to compute depreciation, you got opening WDV and whatever depreciation which is actually allowed, reduce that and that becomes your closing WDV. So what is depreciation actually allowed is allowed in terms of section 32 rarely 38 too. So even the partial disallowance which has to be made mandatorily under section 38 too will have to be computed and the question is how to compute it. Now of course section 13 itself says let assessing officer demonstrate whatever the best method assessing officer can find out, and of course we have got many judgment right of Kushamuji's case Supreme Court in the context of capital gain. So even though there will be a difficulty in computation, nonetheless you have to adhere to the scheme of the act. Just because there is a difficulty, you cannot say the look provision will not be made applicable. And as rightly pointed out by in the morning section, there is a Gulati Sari Center decision 71 I 73 where it has been mentioned that yeah, you can have disallowance, a partial disallowance of depreciation in the scheme of asset. Friend, here very important distinction should be made that an asset, let's say an office which you have been using past for business purpose and since last 3-4 years you have given on rent. Now, of course, you don't get depreciation for that office or one part of the office, assuming you are only a part of the office. But that does not mean that asset is to be the asset of the block of assets. That will come later on, because there is a confusion that no, yet though there is no depreciation allowable because of 38(2), but still it will remain part of block of assets. With this, the next question is regarding the sale of building trees. This is a very interesting issue. The first is whether, as I said, the building was at all part of the block of assets, because the SSC claims, look, I might have been used this office premises long back, but since last 5-6 years I've been using for my own personal purpose. It seems to be part of my business asset. So how you can say today it is part of my block of assets? Now friends, same thing, see sometimes some of the arguments what we place before the courts hits you in reverse way. We have been arguing past that look, there is no, after the scheme of block of assets, there is no individuality left. And you, in fact, their judgment said that even the asset ceased to be used for a purpose of business, let's say for a lot of business, still I should get benefit of depreciation, I should continue to get benefit of depreciation because there is no mechanism under section 43, subsection 6, we define WDV to not to allow depreciation on such assets which has been stopped being used. So such argument now in reverse way hits you that assuming you had stopped using the asset for a business purpose, but as on the last day of last year, it was part of block of asset. Under the scheme of WDV or section 43(6), there is no mechanism to exclude such asset, because 43(6) says that you, given an opening WDV, what you can exclude or what you can remove from the block is only an asset or sale value or a reduction of the monies payable with respect of any asset falling in the block of asset which is sold, discarded, demolished or destroyed.